Καλή σας μέρα και από μένα. Good morning, everybody. We're about to discuss a topic that is really interesting, building a capital markets union and enhancing investor confidence and protection, with distinguished guests and people that really know this issue much more than I do. Let me present you Ms. Anastasia Stamou, Vice Chair of the Hellenic Capital Market Commission. Hello, Ms. Stamou, thank you for being with us. Ms. Natasha Kazanave, Executive Director of the European Securities and Markets Authority. Good morning. Mr. Nikolaos Porphyris, Chief Post-Trading and International Business Development Officer from Athens Exchange Group. Mr. Jean-Paul Servet, Chairman of Belgian Financial Services and Markets Authority. And Mr. Olaf Hazen, Principal Attorney at Grant and Eisenhofer. Let's start. I would like to have 3 to 5 minutes, your first opinion and your first preliminary remarks from each panelist, because for the Capital Markets Union, ladies and gentlemen, to succeed, European citizens as individual investors and savers should be at the heart of the project. Therefore, we appreciate Commissioner McGuinness' remarks at CMU conference on 1st June, where she said that she aims to adopt a very strong strategy for retail investments and to put retail investors at the heart of our work. The retail investment strategy for the EU constitutes the ideal opportunity to do so and move towards a CMU that works for people. Of course, inviting EU citizens to partake more directly in capital markets comes with a certain responsibility and the need to ensure adequate investor protection. Therefore, we hope that the Commission will take into consideration evidence-based policy recommendations and independent research done, for example, by Better Finance, in detrimental effects of inducements. As things stand, different standards of investor protection across sectors and product categories, combined with the extreme difficulty in obtaining collective redress for individual investors, leave individual investors vulnerable to malpractice and mis-selling, and that's a very important thing. This problem is further exacerbated by the inadequate disclosure of key investor information, leaving individual investors in the dark of dependent on biased advice. If a CMU is to stand any chance of succeeding, it will be essential to restore retail investor trust through increased transparency and disclosure of information coupled with better investment advice. Ms. Stamou.
Well, thank you. The topic of this panel couldn't be more up to date. We're indeed going through a new era of investor protection with focus on the people. With focus on the people, meaning households and individual investors, in other words, retail investors. Retail investors play an important role in the financial ecosystem. They mobilize savings and reflect the real status of trust in the market. The need to strengthen their participation in capital markets constitutes an objective in the core of EU policy. This need becomes more imperative in times of uncertainty like the one we're going through now, when savings must contribute to the recovery of the economy through long-term sustainable investments. In this context, a strong strategy for retail investment would A, incorporate the basic principles and serve the objectives of the Capital Market Union, and B, complement a holistic strategy for the development of the market at large. I give you 4 main objectives of such strategy. The first is moving towards an investor-oriented market by mobilizing a portion of funds from banks to the capital market and from consumer products to financial instruments. The second is managing the gap and closing that gap between conservative, low-risk, low-return investing and emotional, game-like investing, mainly through social media, with high-risk, short-term returns. The third is keeping a balance between providing simple and cheap access to financial products, as well as to relative information, and to protecting investors. And the fourth is legislation and supervision, keeping pace with the economic and social trends. Fundamental in achieving these objectives and others, of course, in the same context, is trust, both in the market and the regulators. The capital market, and this applies also to the Greek market, after a decade, and in Greece more than a decade, different types of crisis, still suffers from a negative perception. Household people, especially young people, have to be reminded or convinced that the merits of investing in capital markets. Trust, on the other hand, cannot be achieved without education. Education is the key for delivering an efficient and long-lasting retail investor strategy. And by education, I mean promoting financial literacy throughout all the pillars of the ecosystem, and in particular schools, starting from elementary school, and explaining the basic economic terms like what a company is, what a share is, what a loan is, what saving is, what investment is. Workplace with share ownership programs, but also with educational and training programs as part, for example, of an ESG policy. Issuers of financial products, intermediaries, and market professionals in general, including lawyers, Mr. Vervese, δεν είναι στο κρατήριο, αλλά θα το ακούσει, πιστεύω, also courts, and also regulators. So in my view, apart from any other quick win proposal that may be put to the table, education plays the most important role for the development of an inclusive, attractive, and resilient capital market because it builds informed and better investors. It builds informed and better citizens. Of course, I'm happy to discuss further during the debate. Thank you.
Thank you, Ms. Tamu. Ms. Kazanova.
Yes, thank you very much. And perhaps let me start by thanking the organizers for inviting me to come here. It's really a pleasure to be in Athens, and particularly a pleasure to be here for a consumer-focused conference. We've only recently started going back to in-person conferences, and it really is an honor to be here with you this morning. So thank you very much for that. I wanted to also emphasize how important this is for ESMA as an organization. So the European Securities and Markets Authority has always considered consumer protection as a key priority. It's really at the heart of what we do. We consider investor protection one of our very core missions. So try to get it right, and very happy to have these conversations to make informed decisions and progress there. When I was looking at the agenda, I saw a new era, and I thought it could not have been better framed, actually. And if you look at what we've gone through, we had two very strong impacts. We had a very strong impact from the pandemic and what that has meant for the markets with a very accelerated digitalization phase. And we've seen how fast and how differently we can operate. And this is true for providers of financial services, but also for consumers. And we'll come back to that, I think. But we've seen many more people come to financial markets with a different way of investing. We've also seen new people come to the markets, new younger generations showing interest in investing, and it's a duty for us to make sure that we can respond to that in a proper way. The other very big shock that we've gone through is from an economic perspective. We have the war that has hit us. We've had the recovery. We've also trying to mobilize financing to finance the transition to a more sustainable economy. So in that context, we need significant amounts. Public funding will not be enough. And we need to make sure that we accompany that trend in a safe way. So if you listen to Commissioner Gentiloni or others, they talk about 500, 600 billion needs per year, and there is no way that the public system can monitor that. What does it mean for us as regulators in the community? I think it's a huge challenge, actually. So first, to make sure, and I think Atlas touched on that we make sure the regulation, the framework remains fit for purpose. So to what extent do we actually have a framework that responds to that needs and that is tailored for the new framework and the new ways of doing things? And second, that as regulators, we remain on top of innovation, that we understand the new trends, that we understand the new ways of consuming, and that we capture the relevant risks in that context. as Natasha said, very rightly so, because ultimately we want to maintain trust in the system. So we need to make sure we remain ahead of the curve and that the framework remains fit for purpose. What have we seen in terms of developments? And I'm sure we'll come back to that in the conversation. We've seen new business models develop, in particular zero commission, commission-free operators. We've also seen the development of social media and what that tells us. What does that mean? How does that fit in our current way of thinking and framework? And I think we'll talk about those later. Just two key issues I wanted to touch upon in my introduction here is, first, these user-friendly apps. And we think that some of that is actually very positive for investors, that we can actually use layering in the information that we put out to customers so they can understand and not be overloaded. The other one is maybe going back to the essence and making sure investors actually get that, what we call vital information, basic information that they can make informed decision. When sometimes over time we've developed very lengthy, complex, detailed information, it's not that certain that we've reached the goal of making sure investors actually understand the risks and the features of the product. So as innovation is developing rapidly, we see that it's very important to work together with financial firms, with national authorities, and also with consumer representatives, so that we can make sure we fully understand what's going on, what the developments are, what the needs are from an investor protection perspective, so that we can make sure collectively that we can accompany those investors that are willing to invest into the market in the safe environment. Thank you very much.
Thank you, Ms. Casanova. Mr. Hasan.
Thank you. My name is Olaf Hazen. I would like to talk about investor protection. I'll try to keep it within 5 minutes. And what investor protection really means in practice from a perspective of an attorney who does investor cases almost all of his time. Throughout Europe, but in other places around the world as well. Let me first say I'm honored to be invited to this conference, and I want to thank Better Finance and especially Yannis Kyriakopoulos for the invitation. For someone with a classic education a long time ago, it's always a special privilege and a treat to be in Athens. I'm here to talk about an extraordinary investment dispute where things went wrong, and where you, and with you I mean the Greek people, Greek investors, found themselves as victims. I'd like to call this case that I've now worked on with Maria and Yannis Kyriakopoulos for about 8 years, the case of the forgotten victims. Who are these forgotten victims? They are Greek, like I mentioned. They are not institutions. They are ordinary people. They are retail investors. Some of them had a small bakery, sold it, and then retired with 150,000 euros or so. Mr. Parente earlier on, he talked about saving for retirement, and he said that many of these retirement savings are kept in bank accounts. That is exactly the case and the problem in this particular case. Some of the Greek investors were grandfathers and grandmothers who saved 75,000 euros for the grandchildren to go to university. And some are teachers, some were in the military. These are all middle-class people, regular people like you and me. They all have an investor-state dispute pending before the World Bank, which has a settlement for investor disputes center. Why do I say forgotten victims? Well, these people, they lost half or all of their life savings. 9 years ago, when the government of Cyprus confiscated their bank accounts. What is odd about this case is that today they virtually get no attention from anyone whatsoever. Not in Cyprus, because in Cyprus, when you talk to people in Cyprus, they believe that they were the victim of a banking crisis in 2013, and that they were unfairly treated by the EU. And this is true. They were a victim of a banking crisis and a government spending crisis, and they were unfairly treated by the EU. But what you don't hear in Cyprus is that one group of people got an even worse deal, a very specific group that got screwed. Greek citizens. over 10,000 of them. It could be more, we don't know the exact number. They're all citizens and therefore, I presume, voters. If, for instance, in the next Greek election, which I understand is in a few months. And yet, here in Greece, the Greek politicians, Greek government, like the Cypriots in Cyprus, they pay no attention to this case at all. Perhaps because they are unaware of the situation, of the importance of it, of the injustice of it. And I am here to change that. The investment dispute of these Greeks, we represent 1,000 of them together with Kyros law. It's an interesting dispute against the Republic of Cyprus. It's actually a unique and fascinating dispute for 3 reasons. I would like to just briefly touch upon them. The first reason is this relates to a unique and unprecedented so-called bail-in. That's a confiscation of assets of regular people, in this case, bank customers, in order to rescue the bank. Now, in 2009, 2012, Greece was suffering the Greek crisis. I don't have to mention that here. And there were quite a few people who were concerned that the financial system in Greece, the banks, could be in trouble and might collapse. So the 2 biggest banks in Cyprus came over to Greece and told people, you know what, come to us. We have a massive banking financial center. We are stable, we are safe, we are safer than Greece, we pay good interest, we speak your language, and you can trust us. After all, we are brothers. And these Greek citizens, they did. They went over to Cyprus and put their money there. Now, during the financial crisis, a lot of countries were in trouble. You will all remember that. And at one point, the thought came up that Europe should no longer bail out countries and banks with taxpayers' money. The money to rescue banks should come from within, a so-called bail-in of shareholders and junior bondholders. Now, that idea seemed simple and easy at the time. Shareholders, they're supposed to know what they're investing in. They take a certain risk. Bondholders, these are usually institutional investors. They know what they're doing. When banks are in trouble and defaulting, bonds are owned by vulture funds, by hedge funds that pay 4 cents on the euro. They know what they're doing. So that's how this idea of a bailout got accepted. Now, there is a third group of stakeholders, and they're quite a different story. And those are depositors. Those are people who have bank accounts. They have their life savings on the line. Now, in 2013, Cyprus implemented the first and only bail-in. This is why this case is so unique, of depositors and consumers with small bonds of systemic banks. There were 2 systemic banks, Laiki Bank, which is also known here as Marfin Egnatia Bank, or the Cyprus Popular Bank, and secondly, the Bank of Cyprus. It's never been done. It had never been done before, and it has never been repeated. And it's generally considered to have been a horrible mistake by economists. Why was this accepted in Cyprus? Well, it was known that many bank account holders in Cyprus were Russians, Russian billionaires, Russian oligarchs. And sure, Europe was not going to bail out a bank so that the oligarchs would be bailed out with taxpayers' money. And Russian oligarchs, they were as unpopular back then as they are today. So this was, why wouldn't we do it? We take their money and they still have plenty of money left. So what's really the problem was the thought. So they implemented this haircut, this bail-in of deposits of mostly foreign deposits. Foreign depositors paid twice as much as the Cypriots did. There was just one problem. They forgot the Greeks. The Greeks were the second largest group of depositors in Cyprus. They had just been persuaded to come to Cyprus. And these were not oligarchs, these were not billionaires, they were not in bed with Vladimir Putin. And they got screwed twice. First, they were suffering, like all Greeks did, of the Greek crisis. And then in Cyprus, they lost all the money that they still had left. They were worse off than everyone. So that's the first reason, a unique and unprecedented bail-in. My second reason, if I may, this was a mass claim. this is a mass claim brought on behalf of 1,000 Greek citizens. The only other time that such a claim has been brought was during the Argentinian bond cases when Argentina defaulted on its loans, which you might remember. Now, there are all sorts of reasons that a defendant state can have objections against mass claims. But if you just imagine a retail investor, maybe Mr. and Mr. Papadopoulos, they just sold their bakery and have 150,000. If Cyprus takes that money away, they won't even have money to pay for a lawyer. And even if they scramble together somehow 10,000 euros to pay for a lawyer, that will only pay for about 1 month of lawyer's fees. And these kinds of cases, the causes of the banking crisis in Cyprus are highly technical and complex. You need economic experts, and they easily charge hundreds of thousands of euros for their expertise. So Mr. and Mr. Papadopoulos, they stand nowhere. They stand no chance against the Republic of Cyprus unless they can bring a case like this together as a group. Cyprus attempted to defeat our proceeding in this case as a mass claim, but it did not succeed. We ultimately won that issue in the case, and that was the only way to preserve access to justice. And it ended up being a very important precedent in the world of international investment law. I'll have one more point and I'll wrap up. I understand. Sorry. The third reason is that we are the only investor-state dispute. And it's almost unbelievable where we have the Minister of Finance, who was in charge of this confiscation at the time, acting as a witness on our side. He's actually quite unhappy with what happened and how Cyprus did it at that time. And even the previous Minister of Finance, who tried to resolve the issue in Cyprus without confiscation, is a witness on our side. So we have several very important former politicians in Cyprus working for us on this case. That leads me to my final remark. What I don't understand in this particular case is when we have top officials in Cyprus on our side, why do we not have the Greek government involved in this? 10,000 of Greek citizens were harmed in this case. And I think the Greek government or politicians should defend their interest. And I would therefore like to invite them to help us out and basically tell through diplomatic channels, tell their colleagues in Cyprus, hey buddy, this is not the way you treat our people. You can't treat our people this way. We've now been waiting for over 8 years for a resolution of this case. When a country confiscates money, it is obligated to pay prompt compensation. 8 years or 9 years or 10 years is not prompt. And while we feel very confident about the trial, of course we do, we got most of the politicians on our side. That could take another 1, 2, 3 years. And these people are getting older. Many of them are above 65. In fact, 40% of our clients are above 65. Several of them have already died. They just cannot wait any longer. Justice delayed is justice denied. And we would like to have a fast resolution. We're hoping that Greek politicians can take their responsibility and bring up this subject with their counterparts in Cyprus. Thank you.
Thank you, Mr. Hazen, for your 10 minutes remarks. Mr. Servet.
Thank you. I still want to speak.
Yeah.
The problem is that the real competition between you, because I have to stop after 5 minutes. I've been told that you are a very tough journalist, so it will be a challenge for you. Now, first of all, allow me to thank the Greek, the Hellenic Investor Association, and of course, Better Finance for the kind of invitation. It's a real pleasure and honor for me to be today in Athens, especially today because it's less warm in Athens than in the Netherlands and in Belgium. So you see that the climate change challenges are the same even in raining countries. No, more seriously, if I may call it that, I will start my comment notice by telling the audience that you are too modest. You told us at Notice that you are not able to say many things about, I would say, the sector. But frankly speaking, I strongly believe that people like you, Notice, are the alpha and omega of the journey about CMU. I think that we now have the opportunity to involve people like you, I would say, non-specialized investor, non-specialized investor, in order to build a real strong CMU. And for me, as I would say, a supervisor at national level, but I have also the pleasure to be vice chair of IOSCO, which is the International Organization of Financial Supervisors. Our focus, our DNA must be, I would say, retail investor, John and Mary in the streets. And I will start, therefore, with, I would say, 3 comments, which are very important, 3 main topics that I believe should play a central role on the CMU. The 3 topics which are, for me, key, instrumental, if you want to be successful, is a proper information of investor to make sound financial decision in a digital environment. Second point is cross-sectoral alignment and challenges of online trading. And last but not least, which is very important for me, and people knowing me know that it's a very important aspect for me and my mission statement at all levels, is how to encourage financial education. These are the 3 aspects. One mistake would be, again, to try to organize a competition between, on the one hand, Natasha, and on the other hand, Anastasia and myself. This is not meaningful. This is especially not useful for the CMU, to try to see if we can organize a competition between, I would say, a centralized supervision, or I would say an ecosystem working with the support of FCMA. Let us be clear. The ESMA ecosystem is the same for EIOPA, is working well. This is something which was assessed very recently by the European Commission. We are going in the right direction. There are still, of course, improvements to be made. That's quite clear. We are speaking about architecture, I would say. But I think that the best answer to that is to say who is the best place in order to perform the most professional, appropriate, and meaningful supervision. For some aspect, that will be the job of Natasha and Verena Ross in Paris. Wholesale, third country, how to start from scratch across border supervision, rating agency. For other aspects, that will be, I would say, the job of NCA, like the Hellenic Capital Market Commission, or the Financial Services Market Authority in Belgium, or the IFM in the Netherlands, I would say, of course, working in a single rulebook. That's, I think, a debate that we have to avoid. It takes a lot of time, energy. It's very, I would say, glamorous at political level, but I think there is no added value. More important for us, for you, for Europe, is to see how we are able to live in a new world. And I mean by that, the fact that we are now living in a digital environment. Just one story about my experience between Brussels and Athens this night. I left my office around, I would say, 5 o'clock. I went to the airport of Brussels. I had to wait a little bit, and more than a little bit. I arrived during the night. I had a lot of paper in my hand language. I didn't read any line. I only worked with this. And I see that many people in the audience are also now playing with this. If we are only working with this most of the time in our private or professional life, of course, you would expect, you can expect, you must expect that investors are doing the same when they try to invest. Especially people who think that I am very old. My own kids who are 20, 25 years old, okay? So we have to admit that, and from this point of view, notice, I think that the first aspect, if you want to be successful in how to build CMU and how to enhance investor confidence, that's the key aspect. There is no capacity to have a sound financial sector without confidence. If the confidence is leaving, we have serious problems, especially if we want to take on board John and Mary in the street. And therefore, I would say, we need to think strongly. That must be the key priority for the European Commission and the two other co-legislators for me, in how to help a retail investor who face an increased information overload. Overload, let us be clear. People like Anastasia and myself, we are never happy when we have to file 300 pages of prospectus. I hate that. I hate it. You don't have to think that I like. Some people in the audience maybe like it, especially people with a successful commission of barrister, of banking advisor. But I prefer to go to the point, to put on the first page, that's a requirement in Belgium, my own doctrine, to say who are the risks for the company, not about something arriving somewhere else in a continent, another continent, but what the thing about liquidity, business model. That's key information, to the point. And that's especially important when we speak about the digital world, because we live in a digital world. And therefore, the regulatory framework, especially at European level, needs to be fit for the digital age. One example, disclosure requirement must be paperless. Okay, everybody agrees with that. But if you want to read disclosure with that, and that's another adventure and challenge than to read this, okay? So we need to think about it, and it must be, frankly speaking, smartphone fit. What's the problem to say that we need to admit that? And of course, future-proof from a technical viewpoint. Why not to think about, I would say, a 3 layers architecture? First layer, most vital information. Information investor must know. Second layer, including information that investors should know. And layer 3, nice to have investment. And this new approach, I would say, to disclosure should be supported by appropriate consumer testing. Advertising, yes, advertising, key aspect for me, because of course, most of the time there is an impact from the marketing on the behavior of the consumer. I belong to the minority school of supervisors who strongly believe that we need to take our responsibility. In Belgium, my staff is screening 4,000 marketing material every year. Of course, the challenge for me, it's not to be too slow. 95% of the marketing are approved by my staff in less than 2 days. But I can tell you, there is a consensus, even from the industry, to say, okay, we need to be there ex ante for that. Second aspect, cross-sectoral alignment in challenges in online trading. I was very happy, and I strongly believe in this idea of the European Commission to come with a kind of holistic view and investor-centric approach the Commission is taking in shaping its retail investment strategy, which should look at the broad picture, especially in the field and protection. And please, 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 no more silo approaches. Not meaningful, let us be clear. Could you tell me why we need IDD versus MiFID? Someone in the audience? No reason. What's the added value, the explanation for differences between the two approaches? Just the quality of the lobbying of one sector versus another one. There is no other reason, let us be clear. And when I have to check, I would say, I use it, a structured usage, I don't see a difference with a life insurance product, of a structured banking product. Let us be clear. We need to avoid that. And that's, I think, also a key message to be delivered, a positive, a forward-looking message for the sake of the quality of information. We also have to think that every day in our life, the starting point is you. What are the needs? What are the concerns of investor? And also, can we maybe try to think out of the box? I will say something which is absolutely revolutionary to you. From time to time, we don't need a legal basis for taking action. For an excellent teacher at the University of Leiden, that's shocking. That's what we did in Belgium 10 years ago. I banned, without any legal basis, the selling to John and Mary of too complex structure. Nodeloos gestructureerd. Nodeloos in the I translate in Dutch. And so I didn't have any legal basis. I received the support for all the banks. 10 years after, the market is still alive, let us be clear, well performing, but the complexity has been divided by 3. and no more inducement and other aspect incentive. So from time to time, we need to think about how to, I would say, to have, I would say, a gentleman agreement with the industry for that. And I think that's something which is rightly conveyed also by the message. I had the pleasure, Natasha, and I know that Better Finance is one of the historical members of the stakeholders group of ESMA. There was interesting advice published recently by ESMA following the surge of information. And that was the added value of this nice advice to recommend clarifying that existing information requirement should be interpreted in such a way that investment firms have to inform clients relevant in a clear, non-misleading and comprehensive form of risk of rising inflation. At the same time, you know what happens of what didn't happen with inflation rate. Last but not least, let us be clear. We are not living in a black or white world, I would say. I don't think that our job is to say, I only believe in our capacity to require from bankers, I would say, lessons to be learned from the crisis. And at the same time, I don't believe in a message saying, okay, all the efforts has to be done by the investor about financial education. Our message in Belgium, for instance, is to have I would say, a mixed blend. We have to be supervised, very tough, but at the same time, we need to be on board in order to encourage financial education. In Belgium, we started 10 years ago, a new program called Wikifin. We check the copyright at this time. 3 pillars, website, 4 million views every year, partnership education, and last but not least, we open a financial education center, fully digital. I had to be convinced, fully digital, free for all teenagers. I only receive negative advice. You are crazy. You know, Brussels is such a giant city. Oh, right, okay. People will never go to Brussels. It's too far, 50 kilometers far from Brussels. 2 years later, it's fully booked all the year with enthusiastic teenagers. Some teachers coming 2 or 3 times. That's what we need to do also. And I had the pleasure to welcome yesterday my colleague and friend, Nikki, the CEO of the British FCA, my colleague from the Austrian FSMA, and then I will have at Bestuur, the members of the management of the IFM in the next day. So we need to learn from each other. And therefore, there is a coordination to be done by ESMA. We know it's not easy to speak about financial education because let us be clear, subsidiary principle know that financial education, it's not the same approach in all member states. There are some difference about how to discuss that at school, but we need to reach another, and of course we are at disposal in order to give support for that. But that's, I would say, my key message. Not this so digital world, I would say. The needs of investor are the starting point and how to encourage financial education.
Thank you, Mr. Servet, for your 12 minutes remarks. Okay.
You are too polite.
Yeah, I'm trying. Mr. Porphyrios.
Thank you. I would like also to thank Better Finance and the Hellenic investors team for inviting us. We are a simple infrastructure, and from our side, what we would like to see is how we can build services to make investors' life easier and happier. And we can, the more we can challenge the actual investment, we cannot do much about it, but at least the infrastructure has to be there. So just to have a view of what happens in the Greek market, the retail investment community in the Greek market is very strong. It's a very important pillar, and the transparency of the market helps them be there. So they constitute about 21% of the average daily trading value. Thanks to the Nordics, where we got the model, the post-trading model, we have a segregated account model with a direct holding accounts of 1.1 million, about 10% of the Greek population. There were more before, but due to various cases in the last 12 years, they have decreased. But out of them, about 60%, 600,000 accounts are with non-zero balances. And the retail investor holds 17% of the market cap of the Greek market, around 12 billion. the average traded value is nearly 2.3 thousand euros. So it's a retail size average traded value. Now, how do we try to cater for the needs of the retail investors? There are three types of services. I start with the most important one, the last one, but most important one, the seminars in the Athens Academy, where we cooperate with the CFA Institute, with the CFA Hellenic part of it, and along with other, we provide a lot of seminars for investors. But on the front end, we have several, or I would say three main activities. One has to do, and I want to reiterate, data feed. It's something very important, especially now that consolidation of data, consolidate tape is become part of the MiFIR package. We provide real-time feed at extremely low prices, especially for retailers. We're a small market and we have to cater for them. And of course, the delayed feed is at no cost. That's very important for retailers. Another very important service is we built back in 2016 what we call the centralized book building service. What it is, it's a fully automated process where which helped us create a retail corporate bond market. What it is, it is in the same way that you put an order in the market automatically. With that type of action, you can participate in a book building for an IPO, for a share capital increase, for a bond. It's fully efficient, fully transparent. It makes life easy for the investors, and also participation in the free float of stocks and in bonds are quite high. The third service that we offer is we offer, I would call, access to 18 markets. So we have a service where through the same infrastructure that our brokers have, they can, the retail investors can route orders to 18 markets. We have executing brokers in those markets. So it's a technical provision of service provision, which makes access to those markets easy for them. On the post-trading side, I will come in the next two slides. But one of the most important things that we have, back in 2011, we built up CSD links, and that's something very important because for dual listing and for all the stocks that and bonds that investors hold in other markets, those 19 markets, including Athens, they can hold them in one single account. So it's a one-stop shop service. Now, regarding the post-trading services, I'm just going to quote a few. One is a web service, which is the classical service that anybody wants to have in order to be able to see balances, transactions, corporate actions in a single place via his internet or via his mobile. A second one is very important, and it's an alert service that we give indirectly to end investors. So if they have one or two brokers and they can get information about what happens in their direct holding account in the CSD via SMS or via email. So it's an alert service, which is optional. The third one is very important. It's the inheritance related services. It's very important to make life easy if somebody passes away, so that we don't have long and difficult and costly and I would say cumbersome processes. It has to be very straightforward, and that's what we try to do. The fourth is interaction with the tax authorities. At no cost for the investor. All the information he receives are passed to the tax authority regarding the update of the annual form that they have to complete. So everything is done without cost to him. That's also important. And last but not least is pledges and usufruct services that are important for investors, for collateral givers, collateral takers. That's done also centrally. Some very important added value service that we have recently added in our portfolio for the investors as an infrastructure. The joint investor account, similar to the joint banking account, you can have an account as a retail investor where you can share that account with other people, other physical persons, and that's similar to what you do in a joint bank account, and it has tax efficiency in a big scale. The second one is the digital safe box. What it is in those joint safe accounts, security accounts, the primary holder, he might have his kids, but he doesn't want his kids to run away with the stocks. So we do an additional direct consent service where the primary owner of the account has to consent if somebody has to move securities out of that account. During the last 2 years, we developed an AXIA shareholder meeting service where basically voting it can be done remotely. The two-factor authentication via the internet can be done by the end investor. Voting, proxies, or receiving certificates from the issuer is done automatically. They can participate via WebEx to the hybrid conference that we held, and we've done more than 90 the last couple of years per year. Additionally, we have, in order to increase participation of retail investors in all type of events, of corporate events, we have created for a long time a daily registry services where the issuer receives all information of shareholders and bondholders in real time every day. If they are direct holding, he gets the information. If they're omnibus accounts, we offer an additional service with the help of Shareholders' Rights Directive 2. We can do identification of shareholders. We can identify who is behind, who is the beneficiary owner, and we can give it to the issuer. And that is quite important, but there are pain points. Pain points because, for example, third countries outside the EU don't give information, or the chain of intermediaries are not fully automated in the way they give information. And last but not least, we give bondholders representation services to issuers, and that's why we link bondholders to issuers. Future plans, as mentioned before, we want to go digital, more digital, make life easier. We are an infrastructure. Members and brokers and custodians, they cannot compete on something that is a cost part, that they increase their cost and they don't want to pass that cost to the retail investor. What we wanted to make onboarding, identification of retail investors, KYC, AML, all appropriateness and stability tests, digitalized, white labeling, and give it to our brokers and custodians to give it to their clients at a lower cost. And the second one is to enhance the web services to give more information about corporate actions and analytics capabilities. Thank you very much.
Thank you, Mr. Porphyris. I think we have too much food for thought from all your remarks. Mr. Porphyris, given that equity investing surged during the pandemic, during the first 2 years, and with local stock exchanges, regulated markets saw significant increases in the number of trades which were of smaller values and volumes, suggesting a stronger presence of retail investors. What was the Greek experience? And how did it impact the market capitalization of listed companies on the Athens?
As we remember, in March of 2020, the volatility surged to went over 100%. At that point in time, being a transparent market, we had a large number of retail investors taking over positions from international, let's say, investors who liquidated the positions. Retail trading activity increased by about 25% and holding by about 18%. The index in 19 was up 45%. On 2020, it was down by about 12%, and it moved back up 13% in 21. So those investors, retail investors who got positions during the crisis, they were better off if they held their positions. What is very important, and one that we are missing as a pillar in Greece, and it was mentioned before, the pension plans and the local institutional investors are mostly mutual funds. We don't have pension plans, or there is a big reform underway. There are lots of Pillar 2 and Pillar 3 products, and that's something that we are looking forward to in order to create a second turbine to the plane, so that it's more not only retail investors take the lead, but also local institutionals, when international investors who have more than 50% of their holdings liquidate positions. But it all comes down to the transparency of the market. We believe that the model with the trade size, the average trade size, and the information supplied to retail investors is very important. We believe that consolidated tape as an instrument is powerful on the post-trading side of the business, but not so much on the pre-trade. It's more, I would say, increased risk for maybe smaller and medium exchanges to lose some of their revenue, and then would be more difficult to create more services for the retail investors. And we believe that the market, which is transparent, and the equity market has been transparent through a number of crises, the local Greek crisis over several years, the pandemic crisis, the more recent Ukraine related crisis. It's been very, I would say, resilient, as opposed, for example, to wholesale markets like bond markets, where there are less transparency, there are more dealer and higher, let's say, higher size dealing, and that there the consolidated tape would have more of an impact.
Thank you. Switching now to the topic of investing determinants, several national financial supervisory authorities have noticed the emergence of finfluencers, individuals who use social media networks to share their views or experience on investing and capital markets. The reality, ladies and gentlemen, is that some of these finfluencers may actually be advertising financial products or steering the masses to certain investments. In response, FSMA issued a warning to market participants in 2021, reminding of the obligations when providing recommendations in the virtual public space. Ms. Tamu, did the Greek HCMC observe this trend as well in their local markets? And how does the Commission here plan to monitor this development and, if necessary, taken enforcement action?
Yes. Actually, we haven't observed any such action in the Greek market, and we have not yet any complaints about such an activity. That doesn't mean, of course, that we're not alerted, and we're monitoring the internet, and we're monitoring every behavior that may be not compliant with the legal framework. In this respect, we may issue warnings, risk warnings, regarding any activity that may be outside of the legal framework. And also we repost announcement of FSMA or other organizations regarding risks. And we also do some mystery shopping in order to see what's happening in the market and track any behavior that's not legal. And of course, if we have evidence or signs of an activity that might be also have a penal dimension, we file a report to the General Attorney in order to investigate whether it's a crime or not. This is our general scope of supervisory work.
Thank you, Ms. Kazanave. Did ESMA continue to monitor this trend, and how widespread is it, and what would ESMA's regulatory or supervisory response be?
Yeah, I think this is really very important. We've talked this morning about digitalization, what this means for the way investors go to products. And we've talked about these new investors that come to the market. And this is very important for all those of you who have teens in their families, so kids, cousins, nephews, whoever, you see that they don't consume information as we older people do. So they don't go to websites, they don't go to normal media outlets. They go through TikTok, Instagram, Twitter, YouTube, and they put a lot of trust in people who communicate. And these YouTubers or influencers on all topics have a tremendous impact and influence on then decisions that are made in their everyday lives. So including on investment decisions. So it's important for us in the community to make sure that for the investment products, the way this is done is very clear that the people who are providing that information, they are aware of the risks. That means, do they declare whether they have a conflict of interest? Do they explain who they are and what the source of the information is? And does the investor on the other side actually understand what the information is and what this person is telling him or her? So we put a number of statements out, and this was triggered by the experience we saw in the US. So some of you must have seen this. GameStop was a meme stock. And all of a sudden, so this was a stock that was the target of short sellers that had massively considered that the business model was not viable. So it was really going down. And all of a sudden, a very large number of retail investors played the trade the other way around. And they created what we call a short squeeze. The problem with these events is the sustainability and whether the people understand the risk, because very quickly it can turn around and the investor detriment can be very significant. And we are not always certain that investors understand. These situations have not been observed in the EU, and the framework on short selling is different. At the same time, this was a very important sort of wake-up call for everybody to think, okay, we need to be on top of what's going on. We published 2 statements at ESMA with the support of national authorities. The first one was to say, please, investors, you must be mindful of the reliability of the information that you are consuming. And the other one was targeted more to the providers to say, please disclose who you are and please explain what the information is coming from, what you're doing, and be mindful that to the extent that you are providing information to the market, this might lead to market manipulation. It could be interpreted as market abuse if the information is misleading, of course, only, not if it's pure information. So there's a fine line between what we call in the technical jargon investment recommendation and what is just an opinion. And that has to be very clear for the investor when he's making his investment decision. So you asked about follow-ups. So there is a lot going on and making sure, again, that the regulation is fit for purpose. So that is still discussions ongoing. We're working with national authorities where there are different situations there. And we're looking particularly at how can we continue to invest in these areas where traditionally national regulators are not necessarily there on social media. One interesting point I wanted to share is a study that was conducted by our colleagues from the Dutch AFM. They tried to see in their market whether they could assess the size of influencers, and they have looked at 150 local influencers, 11,000 followers. And what is striking is that what they see is that about 10% of investment decisions, investors state that they did use information that they got from social media. That's a lot. That means a significant percentage of investors are actually looking to these sources of information. So yes, certainly not the end of the story. We're continuing to work on this with our colleagues from national authorities to make sure that we provide proper advice and warnings to the market.
Thank you. Certain retail-oriented brokerage platforms launch internal forums of discussion, only accessible for their users, but added features by which the visibility and arguably the credibility of certain users can be increased. Given that the younger generations tend to trust more the opinions of their peers, this model may grow in popularity. However, the model opens 2 branches of questions. First question for you, Mr. Porphyris, are traditional stock exchanges planning to be more retail investor oriented, and how do we attract more households to lead markets?
Well, as an exchange, we are of the opinion that investors should trade safely rather than trade more, although it might be a bit a counter argument for the volumes. We prefer to be on the safe side rather than be on the quick and fast side of trading. We believe that, let's say, products like the centralized book building, which basically increase free float in a long-term way, in a long-term and sustainable way to the investors, that lower the cost for entering the market, the digitalized onboarding, all the aspects of transparency. Research, which has been following MIFIR, has been in a kind of let's say, not covering smaller and medium stocks, which is something that smaller investors, retail investors might be interested in, are things that would close the gap, and that's how we would like to get more investors in. Forums are good. It's not something that we would adhere to as an exchange, or we would create or sustain one. But we believe that information should freely flow, but there should be a more, I would say, way of controlling, and that's through MiFID, through circuit breakers. We've seen incidents in the past that can move markets. We should make sure that those incidents don't occur. So the safeguards are there. The infrastructure should be assisting to lower the cost and to make things easier for investors. And the MiFID review and the retail agenda, I think, goes hand in hand, and it's something that will empower citizens to invest in the CMU in Europe.
Mr. Gervais, is this good news or is it a sound of alarm for financial supervisors?
I think it's, generally speaking, a good news. And I think that there is a momentum. As many people know, young investors are back on the stock exchange. Many papers were published, I would say, after the outbreak of the COVID pandemic, saying that the young generation is back on the stock exchange, I would say. And we were able to observe it due to the quality of MiFIR database managed by FSMA with the support of the NCA. So it means that in many countries, I would say, for some period, it's not exaggerated to think that the number of non-frequent young investors has been multiplied by 10. And that's, for me, I would say, very important and positive news, because frankly speaking, I don't know if there are journalists in the audience, and if it's the case, except you, good news, the journalists must be there, I would say. I prefer everybody speaking about how to finance real economy. Let us be clear, at the stock exchange of Athens or in Euronext, I would say most of the time, the shares listed on stock exchange represent a capacity to finance real economy, okay? Well, real estate, bio, and so sustainable finance. And I prefer that the young generation decide to invest in shares listed in a regulated environment than losing their time and their money in crypto asset. That's my very clear message. And I'm very happy to see, thank you. And I'm very happy that all kids are telling us that. But the problem, of course, we don't have to be candid and naive, because there are also, as you rightly stressed, I notice some new concern needs by the use of trading app. Okay, we don't have to go to fight against modernity. I think that's my personal point of view, private and public and professional life. So how to deal with that? How to take into account the fact that they are influencers? I don't know if you know that copy trading is a reality. How to copy your investment policy on the policy decided by so-called influencers. Most of them are even not specialists at all. They are specialists in football, in tennis, but not, I would say, in investment. So therefore, we need to monitor our market. And in many countries, and for instance, in the case in Belgium, we opened the dialogue with, I would say, banks using trading apps. We don't have, I would say, example of PUF, and we are against, I would say, let us be clear. We are supporting the idea of banning that to a major extent. But I think that we need to understand how it works. And that's the reason why I would say we had many sessions with different banks in Belgium. And the objective, for instance, in Belgium is to publish a page saying about the expectation for trading apps. And I will just give you in 1 minute. I'm not sure that you believe me that I'm
counting.
Yeah.
I'm counting.
I think that you are right. No, I will do it. That's our expectation. Some messages for the banks managing trading apps are quite obvious for you. But let us be clear, this is linked with important aspects. Please be aware that you must be able to identify the transaction induced by the communication of information via the application. Identify the customer who follow the recommendation made via the application and determine whether that's a frequent or infrequent behavior. Measure the impact of adding or removing an instrument from a selection of the rim. Analyze the impact of instrument selection that are targeted at a specific client of the so-called millions on the transaction. And last but not least, something amazing, but it's about the Pavlov reflex. Can you measure the length of time a consumer stay online before completing a transaction? We are not speaking about the same pattern. If someone takes 3, 4, 5, 10 minutes before completing the of if we have to speak about someone pushing on the button after 3 seconds. And therefore, I would say we need to say to the banks, you need to take action to adapt your internal control architecture in order to have a robust system of consumer protection. That's it.
Okay, I was sure that would be more than 1 minute. And it was so, Ms. Tamu, from a supervisory perspective, are there risks in what we call social trading?
Well, there are also good news and there are also risks, and that is the great challenge. One question is, I think Jean-Paul answered it today, why people choose to invest through social media? I mean, this is a question myself, most of the times I cannot answer. The answer might be that not only we use social media as a tool, but we actually exist through them. So if this is the life, and this is what young people are doing, the generations Z and Y, then we have to understand that way, that mindset, and we have to monitor and then decide if more regulation is needed. And as far as influencers are concerned, in my preliminary remarks, I pointed out education. I didn't mention education of influencers, but I think this is also a point that we have to make, starting from educating students at schools. So we create a new generation of educated people in general, citizens in general. So influencers are two categories of those influencers, as we call them. The first one is those who act on behalf of regulated intermediaries, of regulated firms. These influencers are acting on behalf of the intermediary, so it is the intermediary who performs that activity. So whatever they do, whatever advice or recommendation or other behavior or other activity they are doing, falls within the scope of the regulations, MiFID, or whatever else is applicable. So these influencers are going to be regulated through the firms they're representing. And in this context, I think regulation is there, and perhaps more guidance is needed. And ESMA has recently published a report on that, so that more guidance is given to the application of a regulation already existing. The other type of influencers that are not regulated it's another story. What they are saying through the social media is most of the times simply an opinion, which is not regulated, and nobody, of course, wants to restrict it. But through that opinion, GameStop is an example of that. Even financial, the integrity of the market might be hindered. Why? Because this may lead to a herd behavior, people just going together and following a hype or a trend without have studied the fundamentals of their choice, what justifies their investment, and why they are doing that investment through the social media and not through the centralized financial system. And so is this a game? And are they treating this activity as a game and not as an investment? This is something that also you have to think about. And if it's a game and it's an addiction, then other regulators have to be in the picture. So it is a challenge, and it is for the regulators to find the right mix to meet the need for financial integration and to use technology, innovative technology, on the one hand, and on the other hand, to provide investor protection and protect the financial stability and resilience of the system. And in this panel today, both NCAs and ESMA, we achieved convergence on the key principles that we have to follow, which is dissemination of information, proper and not false and not misleading information, and alignment and also education.
Thank you, Ms. Stamo. Let's stay the same topic issue, because research by Better Finance suggests that there is a new wave of retail investors in a younger generation of tech-savvy savers with an increased appetite for risk and disruptive models. Some regulators noticed, for example, the British one, noticed excessive risk taken when making investments, or the Dutch regulator reported a growing number of do-it-yourself investors, for example, those who use execution-only services. This puts the product complexity regime under the spotlight and calls into question the palette of products distributed without a suitability or appropriateness assessment. Ms. Kamenaz, how does ESMA assess the situation, and what is the expected regulatory response?
I think this is fully in line with what we were discussing earlier. This is just a translation of the trends we've said. So just to follow on the note of my colleagues, it is positive that there is this appetite for investment in capital markets, of course. It's just our duty, because then there is a risk, like we saw in the internet bubble or in other occasions, that then you just lose the investors if we don't get it right. In this particular case, we've seen these figures. And for example, the AFM has assessed, so the Dutch authority, that 6 out of 10 investors prefer to do it themselves. They just go. This is facilitated by these new proposals with these apps that make it easy, or at least seeming so, to access the markets. What the UK FCA identified is that when they ask the investors, but how much can you afford to lose in these investments that you're doing? 2/3 say it would have a material impact in my lifestyle if I actually lose these investments. So there is a duty that these savings are properly safeguarded, or at least that the investor makes an informed decision here. So as we said earlier, the key trends here are financial education, adaptation of the framework. We are very much at ESMA in favor of all these apps, of all these new technologies, to the extent that you can demonstrate it's in the interest of the investor. So if we can have new apps that make it easier, that make it clearer, that maybe facilitate the digestion of the information we're trying to get there. I very much like what Jean-Paul was saying with these 3 layers. Very good. Then let's use it. But to the extent that then it's misleading, or in 2 clicks, then you are exposed to very huge risks, then we are not okay. On the first point, then we would be happy to have vital information, make sure the investor receives product features, risks, and costs. On the other hand, if we see that they are very easily exposed to non-regulated space such as cryptos, then we have a concern, and we went out with very strong warnings with the NCAs, a very big campaign on social media to explain you need to be prepared to lose everything there. What this means in terms of the risks also, we see, if we look forward, that with the rising inflation, there is a risk of investors not understanding the impact on real returns. There is a risk of excessive risk-taking in that space. So we need to collectively be mindful of that. I would just finish with this point on alignment that we also very much subscribe to, trying to make sure we have the same rules fit for purpose across sectors, and that we don't have a situation where it's very difficult to invest in securities products, it's a bit easier in insurance products, and it's super easy to invest in cryptos. That is clearly not the right outcome. So let's get together and make sure we have the proper framework.
Thank you, Ms. Kaveneza. Thank you, all of you. I think we had very, very interesting remarks and comments. So let's have a coffee break, and afterwards we'll come back with two very interesting keynote speeches from the Minister of Development and Investment, Mr. Athens, and the President of Hellenic Development Bank of Investments, Mr. Haris Zavropoulos. Thank you.